Good afternoon and welcome to our weekly wrap. We have seen Newsflow this week stem mainly out of the US, with earnings season now in full swing and this week seeing the busiest so far. So I will now just focus on a few of the social networking names, with LinkedIn, Twitter and Facebook all reporting this week. All three companies beat on their EPS, however went on to fall when they opened the next morning. So with Twitter, concerns were around new users and user participation. With Facebook, there were concerns around the growing costs. And finally with LinkedIn, there was questions over whether their EPS grew organically or whether it was because of recent acquisitions. Also this week we have seen the Fed rate decision, which saw equity futures fall and T-notes rise initially, and this was due to the fact that no indication was given as to whether a September rate hike was on the cards. However, over the next 24 hours, the statement was interpreted a bit differently and focus was given to the strong jobs quote. Then on Thursday we did see the US GDP, which again the headline showed a less than expected number. However, dollar went on to strengthen given the revision to Q1. So Q1 GDP was revised up to 0.6 from minus 0.2 previously. Also of note, the PCE inflation indicator also came out better than expected, with the market knowing that this is something that the Fed are taking into consideration. On this note, on Friday, we did see ECI, which doesn't normally move the market so dramatically, completely see the dollar erase its gains for the week. So this wage indicator is something that Fed Yellen has indicated is something that she will be looking at when considering raising rates. As such, with fairly light volumes, we did see the dollar completely erase its gains when this came out dramatically lower than expected. On to next week, we will see non-farm payrolls, which will again be in focus considering the data dependency of the Fed. Everyone is looking at to see whether a September rate hike is still possible, whether it will be December, or whether it could even be pushed back to 2016. Non-farm payrolls may give a further indicator as to whether this is the case. Separately, next week sees Super Thursday in the UK. So this comes as the Bank of England will give their rate decision, their minutes, and their quarterly inflation report all in one lump on Thursday at midday London time. So this will be of particular interest. It hasn't been done like this previously. People will be focusing on the recent hawkish rhetoric out of the BOE, with the last minute suggesting that some members couldn't decide and suggested it was a finely balanced decision as to whether to request a rate hike or not. Those are next week's highlights. I hope you all have a great weekend.